My name is Shane Williams, President and CEO of West Red Lake Gold Mines. I'm just going to give a little bit of update, go through the presentation on West Red Lake, a little bit of the story, and a little bit of our corporate presentation. So we have some forward-looking statements. I would ask people to read those. I give a high-level overview of how the company really started. So, Frank Juicer is our main shareholder. He has built a lot of big mining companies over the last number of years. And so we got together about a year and a half ago. Frank believes in gold and he's a big macro gold, believes in the power of gold over the next number of years. And so the best way to get that leverage to gold is to build a gold mining company. So obviously Frank and myself got together about a year ago. We started to look for an ideal project. And because mining today, it takes so long to get mines into production between permitting, engineering, and drilling, we wanted to target a mine that was already in production or could be put into production quickly, so that as gold is rising in this current environment, you can move quickly into production. So we identified an area called in Ontario, the Red Lake region of Ontario, very storied mining district in Canada. Over 30 million ounces of gold has been produced and very high grade in that region. There's also some big mines in this region. It's been very popular for big companies to do some M&A. So you'll see the mines there, which is Kushner, Campbell, and Red Lake. They're the original Red Lake mines that Goldcorp owned. Very, very high grade. They were an average grade of around 25 grams over 22 years of production. High grade, deep underground mines, now owned by Evolution Mining, bought by Evolution Mining for $400 million 5 years ago. We identified the Madsen mine. Previous operators was called Pure Gold. They actually identified a project. We have a Madsen project we picked up, and we also picked up another project called the Rowan property in Red Lake. So we key mines in the area. Also, some of your investors might remember there was another project south of this called Great Bear Project that was bought by Kinross Gold for $1.7 billion. So a lot of interest in this high-grade region of Canada. So a little bit of the timeline of Madsen. So Madsen is a previous mine. It was mined well over for 30 years, from the 30s to the 70s. And there was a lot of infrastructure put in place. It produced over 2 million ounces at 9 grams. So again, a very high-grade operation. And that closed down in 72, mainly because gold prices, if people recall, in the late 70s, early 70s, went down around $400 an ounce. So that caused the mine to close down. Over the last number of years, there hasn't really been any mining on the area. Pure Gold was a company who did all the drilling. They did a feasibility. They permitted. They invested over $350 million in this project over a 5-year to 7-year period. We then got involved in 2023, and really the company only started in June of 2023. And after we saw this asset, we ended up buying this asset. And so the asset we picked up, we really picked it up for Pure Gold had gone into a process called the bankruptcy process in Canada here. It's called the CCAA. They had a few challenges, which I'll walk through, but effectively we ended up buying the project for just over 42 million Canadian dollars in total consideration of Sprott Resource Lending, who were the main lender to the company. Comprised of cash, $6.5 million in cash, and 1% NSR, and we had their debt converted to equity in the new company. So about 42 million total consideration. When you look at the value that was spent on the project, over $350 million, plus we picked up some tax losses of 270 million. So it was a really good timing of valuation in the market to pick up an asset like this. Again, a little bit to give some, this project, the value, the market cap of this project when in Pure Gold, it peaked at over a $1 billion Canadian market cap. it was a very high-grade operation. They moved quickly into operation. They were actually in operation. And at that stage, they commanded an over a $1.2 billion market cap, Canadian dollars. There's been over $350 million spent on the asset. And again, the high-grade ounces, there's over 2 million ounces at around 7 grams indicated and inferred already defined on this project. Just to give some people an overview of some of the infrastructure in place. Look, there's a shaft already on the site, over 1,200 meter shaft. There's tailings capacity already developed. There's a mill in place. There's underground equipment. And there's already permits in place, which are the key. There's discharge permits. There's the IA in place. And there's an IBA agreement in place with the First Nations partners. Just there's the scale of the mill available at the moment. It's brand new. It was put in place in 2020. So really brand new. It operated for less than 12 months. It is an 800 ton per day mill, and it has the expandability potential to up to 1,500 tons a day. So real opportunity to grow this mill over time as we ramp up the project. No metallurgical issues. It operated at 95% gold recovery and no operational issues either during the production. A little bit on some of the history of this deposit. These deposits in Red Lake, they go very, very deep, but they're more high-grade vein systems, which require a lot of understanding of the geology and a lot of infill drilling. And that's really what we've spent the last 12 months doing since we got the project. We've done a lot of infill drilling. We've done a lot of understanding of the geology to get a much more accurate understanding of the geology. And now we're starting to move into mine planning at the next phase of the project. And again, to go back to some of the history of what the challenges of the previous operator is they didn't have a lot of understanding of the ore body structure. Remember, they started from drilling from surface, so these systems need to be drilled from underground. So their interpretation of the model was this blue shape you'll see in the top diagram. And really that interpretation was redone after they ended up having the shutdown and went into bankruptcy. And you can see the challenges of the model, but it requires a lot of detailed drilling, underground drilling. And you can see from the purple model, the blue model through the purple model to the actual brown model in the bottom diagram, how much it changes over time with the increase in drilling. So these systems require a lot of drilling to understand the mine plan and develop a mine plan associated with that. But however, there is a lot of high-grade potential in this ore body. The shaft you'll see in place at the moment, it's down to 1,200 meters at the moment, and it's very, very high grade. These drill holes are really outside the existing. The yellow and the purple are the existing resource model, and most of the drill points there are all drill holes outside of the existing resource model, and it'll give you the scale of the high-grade nature of the ore body. Some good mineable widths and some good very, very high-grade hits, and all of these are outside the model. So a lot of potential to grow the resources. The other thing I'd point out is these ore bodies run very deep. Evolution, which I pointed out earlier, they're mining down today at 3,000 meters in a very typical system. So we're down at 1,200 meters, and you'll see here the potential of this ore body that goes much deeper. You'll see we have at the bottom at the South Austin extension there, we've 4 meters at 34 grams. So we know that this ore body continues at depth. And so it's just a matter of going underground, getting down into the system and drilling deeper. And we have we can see potential extensions of this ore body for over another 1,000 meters depth. So a lot of potential to grow this ore body. Another key point is this 8 zone. These systems tend to have very, very high grade as pods as part of these systems, which develop over time. And the 8 zone is a very, very high grade portion of our ore body, right down at the bottom of the shaft. It currently has about 100,000 ounces at 20 grams. And as you can see from these drill points, we know it extends a lot at depth down. So a lot of potential also to grow within this area. Just to give, with some of this infill drilling we're doing, very, very tightly spaced drilling we're doing now, it would be, 6 to 8 meter spacings. And as we're doing that, we're finding actually very, very good hits, which are actually growing the ore body. The shapes you'll see, which are the yellow and the brown shapes, are the existing resource in place. But as you can see on this other lens, as we're drilling, we're finding extensions to these ore bodies. Some very, very good hits over good mineable widths. So what that shows, as we're drilling, we're finding extensions within the existing resource, but also potential to expand the resources. In the next slide, you will see here is some expansions where we're finding new ore bodies. You'll see over very, very high-grade hits across the ore body, good mineable widths across the ore body, which are 8 meters and 16 grams, which allow these extensions of these ore bodies to grow. So both infill drilling is producing new resources and a better definition of existing resources. Some of the other infrastructure that we're putting in place is connection drift underground, which connects the two parts of the ore body. The previous operator didn't have the east portal and the west portal connected, so some of the capex we're spending is connect these two parts of the mine, which will aid with ventilation and transportation of ore, but also opens up the ore body to more drilling across the ore body, which will allow us to grow the ore body. Just another couple of parts we're doing in the back half of this year, we're doing some test mining. And so some of that is new areas, but there's also some against existing areas, remnant stopes, which we're mining up against. And you see some very, very high-grade ore here, over 15 to 20 gram material, sitting beside the existing mining. So our plan in the back half of this year is to do some drilling in these areas and do some test mining to de-risk this ore body. We're also doing a lot of new equipment across the project, which was never really put in place. The previous operator did a lot of leasing of equipment, never really put the project in successful setup for operation. We're buying a new camp. We're buying some overground workshops, some new crusher, which was never in place, and some water management systems. So a lot going on, all getting ready for a restart of the project. A little bit, our goals over the next 6 to 12 months is we're doing this infill drilling, which has been ongoing for the last 12 months. As part of that, we're doing underground development, which is preparing ready for mining and also setting up these drill stations. As I said, we've looked at some capital items we need, like mills and crusher and camp. We're doing test mining, which will help us define the best methods of mining. And then we're going to do a bulk sample in the back half of this year to resource confidence, to ensure that we have the resource model and the actuals very well guided together. And then we're ramping up. The plan is to start ramping up early in January 25 towards a full production restart in 2025 of next year. A little bit overview of the real value opportunity we see on this project. As gold is rising, obviously gold is rising now up above $2,400 an ounce. And a lot of projects will rise as a rising tide lifts all boats. But really you'll see here, what you see is you get a bump in PNAV as you move from an early stage project developer all the way from a junior producer into an intermediate producer and grow from there. That's really the upside that we see with this project. At the moment we're in this early exploration phase, but as we quickly move from developer unfinanced to developer financed to junior producer, you'll see a lot of PNAV growth on companies, which is really, as we move forward, we'll be really ramping up this curve very quickly in a short period of time. Another one which will really, in these projects, which are really in this area, which are very similar sort of geology, we have the Red Lake mine, which I now own by Evolution, close by us. That moved from a very small production rate, 50,000 ounces at 8 grams, to 500,000 ounces at 77 grams. Again, they discovered one of these called the high-grade zone, very similar to our 8 zone, and it really transformed this mine. Macassa is another one, which was again moved from a small production with a reasonably high grade to a 240,000 ounce 21 gram ore body. And the Fosterville Swan Zone, very similar, they call it a Swan Zone. Again, with one of these ore bodies, they moved from very, very low production at a small grade to very, very high production, 356,000 at 24 grams. So this will show you, and all of these ore bodies and mines were in similar geology and similar structural geology to Madsen mines. So this shows the power of what an ore body can do, an ore body similar to what we have at Madsen. Again, to understand this system, again, the Evolution mine at Red Lake, which is only within 15 kilometers, very similar geology, they're mining down currently at 3,000 meter depth today. We're defining the ore body of where we are at the moment down to only a 1,200 meter depth. And we have indications and drill holes that show that this ore body goes all the way down to this 2.4 kilometer depth at least, where we have lots of drill holes that show the depth extension of this ore body. So lots of upside growth at depth down below. You'll see a number of hits there, 34 grams at 4.3 meters below the existing defined ore body. And you'll see a very deep at 14 grams at 2 meters. So this shows the extension potential of the ore body. Rowan is another one that we have defined, only down to 600 meters at depth, but also there's a lot of depth extension on Rowan. To show some of that upside, lots of high-grade hits well below the ore body. The 8 zone, the potential of that 8 zone extends down at depth, very, very good meters at high grade, and below the South Austin extension and below the Austin extension. All these hits are outside the existing resource that show the depth potential of this ore body as we go down into the ore body and depth extension. And some very, very high level, we did some seismic analysis on the overall ore body, and you'll see that seismic analysis that continues much at depth, very similar structural trend and down plunge that shows the extension of all the way down to 2.4 kilometers, showing the potential depth extension of this ore body. And as you will see, there's a very, very high grade hit with good meters exactly along that structural trend at down over 2.4 kilometers of depth. Again, proving the point that there is depth extension. This is the real exciting part of the story. We have this 8 zone. And 8 zone is a very, very high grade, very similar to the Goldcorp high grade discovery, which I talked about earlier. And you'll see the high grade was discovered with around 9 holes and around 280 grams. We have hits, key drill intercepts within that 8 zone of 5 meters over 300 grams, 8 meters over 120 grams. Very similar ultramafic rocks, ultramafic contacts for both of the high-grade zone and the Madsen. Very similar strike lengths, both very similar, and very similar depths down there. So, and we know that this extends down at depth. We already have 100,000 ounces at around 20 grams defined, and we know that it's open at down depth. So we see the potential to get this to over 300,000 ounces, and at 20 gram material, really transformational to the overall ore body of West Red Lake. Another key advantage of West Red Lake is the sort of a team we have in place. We're backed as obviously by Frank Giustra and his network of people who have built successful mines. We also have a very, very good board of directors who Tony McCooch, who people might recognize, who built Kirkland Lake, which was a very, very successful company in Canada. Duncan Middlemass, who is a director, also very successful, built Westone Mining. And Hugh Agro, who worked with Kinross Gold. So these are very, very high professionals in Canada who've built large mining companies. A little bit on our team, we have a very experienced but young team who we've put in place to build a long-term company over the next 5 to 7 years to become a mid-tier company. A little bit on our capital structure. We have some very, very good shareholders. Frank Giustra, who is the largest individual shareholder. We have Sprott Resource Lending, who we owned around 18% of the stock. Van Eck Gold Fund, again, another big shareholder of the project. We as a management own over 3% of the company. And a lot of the 29% of others are large institutions like Extract Capital, Terror Capital. These are big institutions who came in. So we're very, very strongly held, very little float outstanding. And the majority of this is around, because of the long-term vision of the company to grow over the next 5 years. We have about 269 shares outstanding, 395 fully diluted. Our market cap is around 174, and we currently have a cash balance of 44 million Canadian dollars. Again, just a little bit on the resources. We have over 2 million ounces of between indicated and inferred, of around 7 grams combined. And our Rowan property has around 300,000 ounces at around 10 gram material. And that's a quick overview of West Red Lake.
I think it would be very good if you speak a bit more about your career, because you're the man that's putting this together and actually restarting the mine and building the mine, right? So you've done that before, so it would be good to highlight your career and your experience with.
So my background is mainly in operations and development. I've spent over 20 years building and operating mines around the world. I started my career. I'm an engineer. I started my career with a company called Lundin Mining, who some of your viewers would know from Scandinavia. have a lot of success in Scandinavia. I then worked with a company called, actually in Sweden, I was part of a team who built an iron ore operation called Kaunis Iron. It's actually working today in northern Sweden. I was part of that team who put that project together. We financed it and we built an operational iron ore operation in northern Sweden, actually. And that's actually operating today. Then I worked for a company called Eldorado Gold. I spent 7 years with Eldorado, basically building and operating mines in Turkey. They have 2 big operations in Turkey called Kışladağ and Efemçukuru. And in Greece, they have a number of projects that they're developing. One called the Skouries project, which I actually was involved at the start and building that all the way up to they're moving it into production now. So I was involved in building the team, building the structure, getting the feasibility done, and actually doing the construction of that project all the way through. Was with a company called Skeena Resources, COO for Skeena. Again, had a very good run with Skeena. Was part of the deal who did all the transactions on SK Creek. We bought the Snip project and the SK Creek project from Barrick Gold, and then was involved in setting up the project, building the team, putting it together. And recently with West Red Lake, over the last year, Frank was looking to put together a new company over the next 5 years as gold is rising. And a lot of his previous people he's worked with were at the late stage of the career, and he was looking for somebody as a mine builder, developer who could build this company over years. So that's how we got together. We kind of aligned on both our objectives, and I basically came on board. I did all the due diligence and review of the Madsen project. I found the Madsen project. I went to Frank. I brought it to Frank, and from there we set up a company and went forward from there.
Yeah, it's excellent hearing more on that. And I think more broadly, it's always interesting to ask. I know that you guys within the management are fairly significant shareholders, and of course Frank owns a lot as well. But how do you kind of incentivize all of the key people in the company? They have some kind of scheme. It's always interesting to hear how you approach that, because it's very important in our view.
Yeah, one of the challenges we have as a junior company, obviously, is one of the things we wanted to do was talk about equity upside. So, we believe in the company growing over the next 5 years. Like Frank's vision is to build, and other people can talk about it as in they want to build a mid-tier company, but Frank has had a lot of success with, Endeavour Mining, Arius Mining. These are companies that Frank has built and very much started like at the stage of West Red Lake. We're in the same office that all these companies started. They all started as small junior producers, and over the next 5 years, there was a build and buy strategy to grow quickly. So a lot of the people who came on board, obviously, took a lot of salary cuts actually to come in here to build something new and something exciting. And so it was a lot around the equity upside, the ability to get equity, buy equity in the market, buy shares in the market, and really be part of that story aligned with shareholders. So that's really been a lot of how we've compensated executives. We want to keep G&A very low. We didn't have a lot of cash at the time. A lot of people took a lot of salary companies come in here, but it's really on the team and the vision. we have a very good backer. Our board is very, very good. A lot of mentorship in the board, a lot of opportunity to grow. So it's really an exciting opportunity to come in and grow with the company, aligned with shareholders.
Yeah, very entrepreneurial, which is of course excellent, and that's it's extremely important if you want to do something like this and do it successfully. So I guess I want to ask, you have 44 million Canadian in cash. Is that as of now, or is that sort of last quarter end of financials?
That was last quarter of financials. Today we're sitting on around 35 million Canadian.
Okay. And just to clarify, so people don't need to go through your balance sheet and so on, but do you have any liabilities as of now, or anything significant to speak of?
No liabilities. We had all our debt that was on the original asset has been converted to equity. So we've no debt on the balance sheet at the moment. We did a gold note structure earlier this year, which is a kind of a fixed debenture paid in gold. And so that is sitting on a balance sheet. We raised about $30 million. People can go through our press release. It's really based on the price of gold. It's a fixed debenture based on gold, paid back in gold. So that does sit on the balance sheet. It's around 30 million Canadian, really. But it's paid on gold. It's based on the price of gold, effectively.
And what's the kind of, just to let people know, how much does that affect you when you get right into production? What are the clauses of when it should be paid back?
No, it's a very tiny, it's like 2% of production. It's not a big,
yeah.
It's only it's structured in a way that it's over a 6-year period, and then it's paid back in gold effectively, and it's like a 2%. It starts off very low and ramps up higher. So it goes an average of about 2% to 4% of production. To give you the scale of that. So very, very small, insignificant amount of production.
And then I think it would be interesting
it was done in a sense, it was done in a sense really to minimize dilution. As you're probably aware, the markets of equity have been very, very poor over the last 12 months. And we tried to come up with some innovative ways of financing the company as we're moving forward. And this was one structure that Frank had actually used very successfully with some of his previous companies. And so it allowed us to raise money without having a lot of dilution for our shareholders. So they're sort of things we're looking at to be aligned with shareholders,
So who participated in the last financing?
Yeah, in the last financing, we've really looked with the way we do our financing is we run a president's list, and that's really a list of people that we as a group, the bigger group, bring into the financing. And so most of our financing today it's have been around 50% of our own financing, raising our financing. We've done some brokered financing, but we've been able to raise internally like around 50% of every financing. And a lot of that is Frank's connections, networks, high net worth individuals who really believe in what Frank is doing and what the team is and what around there. And so a lot of that is there. We've also brought in a lot of institutions. And the big Ruffer fund out of London, a big gold fund out of London, came in for a substantial amount at the last financing. Van Eck came in and upped their financing. Sprott again came in and considered. And Frank has pro-rated all the financing to date. So between that, most of our financings are covered between our group and some high net worths and some large funds all the time. So we've been very successful in raising which are very poor markets, as you will know, Gorm, over the last 12 months, pretty poor. We've been very successful in raising money, which really shows the quality of the team, the vision, and the ability of a group to deliver effectively.
Yes, that's true. So, let's say you want to issue equity to get some additional funds. How much, what portion of the existing shareholder structure would put in their pro rata right away? If you just give a ballpark what you would expect.
Yeah, so a little bit. Look, our plan is not to raise a lot more equity. We have we have just under 40 million today in the balance. About another 50 we need is all, Gorham, to put the mine fully into production. So, of that 50, I'm hoping to raise very little of it equity. We're talking about, with companies on debt, we're talking about maybe a potential small royalty. There are other ways of financing. I'm hoping that very little, and maybe we've done all the equity we need. But if we had to do some equity or some level of financing, most of those groups would pro rata Like Frank would pro-rata his 10%. He owns just under 10%. He would pro-rata. And I know that Sprott would also pro-rata their shareholding. So they own 20%. Frank owns 10%. Van Eyck has committed to doing their 7%. So you've nearly 30, 40% already committed on whatever financing structure that looks like. And our existing shareholders above that would also pro-rata up. So I would say most of our financing, 50% would be a pro-rata basis going forward.
And I know that I think Sprott got issued at 1% NSR back when the transaction was structured. I assume it was Sprott.
Yeah.
Do they still own the royalty?
Yeah, they still own the royalty. They as part of the transaction, it was a 1% NSR, and they still own the royalty. And that's part of their investment in West Red Lake. Yeah.
Yeah. So they're incentivized to get it into production. Obviously, with that.
They are incentivized to get it into production. Again, they're a 20% shareholder in West Red Lake. So they remember they put in a loan of around $150 million to the company. So they really took pennies on the dollar by the time they converted their full equity. And the reason they did that, a lot of groups were bidding on this asset, but one of the reasons we were able to convince them to do that is the equity potential of the company. They accepted equity where others were offering cash, and they would have wrote down their investment. Whereas with equity, they believe in the team, backing of Frank, our team, our plan. And so, they'll make more on the equity. They own 20%. As we begin to deliver on our plans, de-risk the project and move forward, our equity will be re-rated. And remember, Pure Gold was at $1 billion market cap. So we're $150 million roughly Canadian today. And as we move along that de-risking, we will be re-rated. So they'll make a lot of potential on that equity upside as we go forward.
And we'll get back to kind of the financial structure in a bit more rigor shortly, but I want to ask about the warrants currently, because that's a potential. Who knows? I want to ask who owns the majority of the warrants, because you have like 70, 80 million owned by shareholders right now, or any of the support might be able to exercise at an opportune time if you need some extra funds and so on. Just give some context.
Yeah, look, that is a potential source of financing. All our shareholders, existing shareholders that are supportive, they own most of the warrants. Frank owns the warrants, Sprott owns the warrants, all the funds own the warrants. And, it's a lot of financing. There's some are in the money, actually. Some at different prices, 90 cents. Some are at 68 cents. As we get that de-rating, and we ran earlier in the year, we ran up to 90 cents. And we did see a lot of those warrants come in earlier, those early warrants at 35 cents. So I do fully expect as we de-rate and get into that range of moving towards production, a lot of them warrants will come back in. Some of them are up to 2026, early 26. So into 25, the time period for exercise will come short. And as we begin to move forward, we will see some of that. But look, it's an opportunity. There's also opportunities going to run like a warranty exercise program, which you can actually do. Go back to existing shareholders and give them some incentives to exercise their existing warrants to bring in some more cash. So there's some opportunities we have to finance down the road as we move forward.
All right, so we're here with Gwen. So I think, Gwen, let's just kick off with you kind of introducing yourself and telling us what you did previous to joining West Red Lake, and you joined quite recently. So just tell everyone who you are. Many will be familiar with you, I think, since prior, but still.
Yeah, absolutely. Yeah, thanks for asking. So my name is Gwen Preston. I am now the Vice President of Investor Relations for West Red Lake Gold Mines. I joined the company about 3.5 months ago in May. And to do that, I shut down a business that I'd been running for 10 years. That business was called Resource Maven. So you may have seen my face around and that name around. The business was, I wrote a newsletter about what I was doing with my money, investing in the mining space. And I had a subscriber base that supported that newsletter because, as we all know, there's a lot of opportunity in the metals and mining space, but it takes a lot of time, a lot of knowledge, and a good network of contacts on whom you can rely to really make the most of those opportunities. So the concept of my newsletter was to use the fact that I had the knowledge and the network, and I put in the time to try and find the best opportunities for investors to profit in the metals and mining space, and then write about what I was doing with my money in my newsletter. And so I did that for 10 years, and it was a phenomenal experience. I learned obviously a huge amount about junior mining investing, from sort of the tiny pre-discovery companies all the way through to the operators. And it was a ride. We had some great wins. It wasn't the best market to do it in, sort of from 2014 to 2024. But the cool thing about mining is that you can find opportunities can exist outside of the market. If you have a great gold market, oh my goodness, it's easier and arguably more fun. But the opportunities can work if you know what to look for in any market. So that's what I did. And I shut down that business when Shane approached me, and West Red Lake was a company that I owned in my portfolio, and therefore in the newsletter portfolio. I'd covered the acquisition of the Madsen mine. I'd gotten my private placement investors in on those early financings. And I really liked the story. And so when he approached me with the fact that he needed someone to help him tell the story, Shane is an incredible mine builder. He's also very good at telling the story, but he doesn't have 2 full work days available to him. So he needed someone to help him tell the story. And it was just a great coincidence. I was just ready for a change after having done what I did for 10 years. And West Red Lake, to me, was a very strong investment possibility. And I really liked the depth of the story and the complexity of the story and what I could do with it. So that's what brought me over here.
So if we kind of zone in a bit about the original decision to go into West Red Lake, so you covered the kind of, you were almost there in the due diligence process and saw the acquisition originally. So what were the kind of the key strengths, and those are maintained today still, that you were really attracted by with the investment case?
Yeah, for sure. So, I mean, I remember seeing the news release come out, and I was actually a bit skeptical. And I think a lot of people were. I'm like, okay, so a new team is going to come in and do right what failed not very long ago, right? Like this, the deal came out to buy this thing only, was it sort of 8 months after the mine went into the CCAA process? So like it was, I think there was a lot of skepticism, and fair enough. So I nonetheless saw who was involved in the deal, sort of the strength of the management team, and, backing from Frank Justra. And I was like, okay, I can see that there's an opportunity here. So I invested after some, initial due diligence. But I was still sort of like, okay, I'm going to give him a chance and see what can happen. The real transition for me was when I went to visit site. And I did that in July of last year. So July of 2023, they had just really closed the deal and gotten on the ground. And I was able to go down and visit the site. And what struck me there was, it's one thing for there to be to present a story that here's what went wrong and that's how we're going to fix it. And those stories, it's easy to have a little skepticism about them because it seems too simple to be true, right? Mines are very complex things. So it seems too simple when you distill it down to a few mistakes, fix them. But when I went to site, they had restaffed the operation, on an initial level, with, of course, a lot of people who had worked there during the Pure Gold days, because they're the people who live in Red Lake. They know the asset. They're good mining people. And when you're at a site visit, you get to talk to everybody. You get to talk to the person who's literally the cleaner, all the way through to, the mill manager and everybody in between, all of the geology staff. You just get to have great conversations with everybody. And the important thing that I took away from that was the common thread. And the common thread was that almost everybody on staff sort of knew what had gone wrong, but they were disabled from doing anything about it. So they could see that the geology staff understood that there wasn't enough infill drilling, and the engineering staff understood that there wasn't enough confidence in the mining shapes, and the milling staff understood that they had been told to expect more mineralized material than was actually showing up. And so, and so they were now trying to manage a mill that wasn't right sized. And there was the team understood that there was reconciliation issues because there hadn't been good management of where the ore was coming from. So they couldn't do reconciliation, so they couldn't fix. And onwards from there, it goes all the way through to the procurement, the people who ran procurement. There was no system for procuring the parts for the equipment, for, how these things need to be organized. And on from there, there was just this very consistent pattern of a lack of foundational organization, and like that stems from, that can only exist in a mine if the management has really done it before and really understands how complex it is to have real operational readiness. And so I heard that story over and over again, and I was like, okay. And every time I heard the story, it was something that was likely fixable. Infill drilling is something you can do, right? More time to develop confidence in the resource, and therefore to have confidence in your mining shapes, and therefore to give your engineers time to create optionality in your mine plan. That's doable. Having a system for procurement, having better planning, having better HR and safety culture, and these are all things that are doable if you have the right approach, if you have the time, and if you have the capital. That's what I took away from that site visit that I did last summer. And it really resonated with me, because there were so many like small stories from each person that I talked to that all added up to that same picture. And so then I started really liking the story, and I started talking about it more in my newsletter and getting to know the team on the management level better. And of course, as I got to know Shane, it truly reinforced the idea that Shane and the group that Shane was building were the right group to be able to remedy the things that had been missing before, because Shane has built 6 mines, and he has deep experience in what it really takes to set up a mine to likely succeed, right? It's just so freaking complicated. If you think about how many steps there are from drilling into a gold intercept to mining, milling, and producing gold from that, there are hundreds of inputs that each require the right timing and the right interfacing and the right expertise. And so operational readiness is really just knowing how to set up all of the systems so that they interact with each other on the right time and give you the chance to succeed. So as I got to know the team, I was like, this is what they're doing. They have the access to capital. They're giving themselves the right amount of time, and they have the expertise to make it happen. So that's what really hooked me into the story. Sorry, a bit of a long answer, but that's the story as it played out.
Excellent. And then I want to ask, kind of, since you invested initially up until now, how do you feel that the pace has been? Has it been on pace? Has there been some obstruction to the original sort of timeline communicated? Could you just describe the story so far for you? Initially as an investor, now part of the company.
Yeah, for sure. So I think one sort of communication struggle that there's been a little bit with investors is that when the deal came out, I mean, this deal happened fairly quickly, in that Sprott Resource Lending was like, okay, we're going to sell this asset. And when an asset goes up for sale, you got to move, you got to do your due diligence, and you got to make the deal, and you jump in. Sprott, when they were doing that, put the asset up for sale, they had a restart plan that they'd had, I think it was SRK put together. And it gave a timeline and cost to restart. And those are not the timeline and cost that we are on track with. That was like a 6-month timeline and a $70 million cost. Those are very modest numbers for restarting a mine that didn't work. But those numbers nonetheless, of course, got out there in the market. So there was a bit of an expectation that West Red Lake was going to restart the mine in 6 months for $70 million. And that is not what we've done. And it actually wasn't ever the intent. That wasn't our study. That wasn't our plan. Our plan was to figure out what the best plan was and to do all the steps to make sure that we could restart it, feeling confident that we would be successful. And so it has certainly taken longer than 6 months, as we expected. It's going to be more like 2 years by the time we go from closing the deal to restarting the mine. And the amount of money that we're going to spend is probably going to be about double that $70 million. But it's nonetheless going to be a quick return to production relative to how long it usually takes to put a gold mine into production. And it's still going to be a very modest amount of capital to get into gold production. So my challenge as the person who's out there trying to help investors understand the story is to make sure that early concept that wasn't our concept. It isn't in play. I do have to address it. The pace of work is very impressive. And I know it may not always seem like that from the outside. I used to comment to people that exploration, mining, or development companies, from the investor on the outside, they probably just look like ducks, like gliding across a pond, right? Just sort of calmly, not doing much. But underneath, they're like paddling like mad, right? And that's sort of what I feel like is going on at West Red Lake right now. There is so much work underway. I can't even really express the number of levels of assessment and planning and information integration that are happening to get this thing ready for restart. So the pace is as fast as we truly can do it. And I think fairly soon we'll be able to communicate that with some clarity to the market when we put out our PFS, and that just clearly defines what we're doing, that a lot of the capital has already been spent, that the timeline is short from here. I think that document's going to really help put the story into its new reality, and hopefully get the market excited about the fact that, we're going to turn on a gold mine soon, and there's not very many gold mines that are starting up in 2025.
So if we get into kind of the second segment there, where we start about restart, and we talk about the re-rating or the multiples and so on, which many analysts and so on focus a lot on. The first one is the re-rate from being sort of unfinanced to becoming financed officially, right? I'm not super concerned that you will that you won't be able to do that, obviously, because it's not a big equity bridge to gap, and you have very credible people here and a solid project. But if we speak about the structure of the financing, how much debt are you looking to take in? How much equity do you feel like you would need? You have 30 million CAD around there left now. What is the total quantum for you to want to get into production, but also be comfortable through ramp up and not freeze all other activities entirely?
Yeah, I talked about, as I said, we have 30 million in CAD. That will probably, and I said about another 50 more CAD to get us into production. And that's not just into production. That is actually to cover that working capital as well, Gorm. It's not all capital as pure capital. We did a lot of analysis on, as you know, a lot of these projects ramp up. It takes a while to ramp up, to get full into production, to be commercial production. And so most of that, probably 30 million of that 50 is to cover this working capital phase. It's not pure capital as you would on a new project, because, going forward, there's about another 20 million of that 50 that I would say would be pure capital as people would understand, which will get us into February or March next year. And the balance of that would be working capital to get us fully into full production, ramped up and into commercial production and actually producing cash flow. So really, once we have that money in place, we're actually all the way into full production and generating cash flow.
Yeah, I mean, so from kind of a conventional 60-40 equity debt split, we're talking about like 10, 15 million in equity max. You would need more in some forms of equity.
The maximum
could be anything.
Yeah, we've raised a lot of equity today, and we've a lot of opportunities. So, it will be 10, 15 at the maximum, I would say, Gorham. Like, I don't really want to raise equity. So we've had a lot of supportive discussions ongoing at the moment. We've had opportunities for some debt. We've had opportunities for some a small stream. There's a lot of financing opportunities in place to allow us, and again, they're not big quantums. It might be 30, 35 million, which are very doable from a point of view of on the project, given the sort of cash flows and values that we're seeing in current gold market. So again, small amount of equity. I suspect it won't be till next year. I'm hoping to wait till we get this re-rating like I showed. And once we get this rating, it'll minimize dilution. So there'll be no equity this year for sure, the balance of this year. And there might be some small raises next year. But again, 10 to 15 million would be the maximum we would need from equity. So really, the last bit of equity over the year has all been the main equity put into the project today.
And I mean, Sprott, they're not a royalty company, but they hold this royalty. Could it be sort of an avenue to explore where Sprott might sell their royalty, you get the cash, and they get equity in return, sort of as kind of a swap of that royalty?
Yeah,
that's something we would consider.
And again, I can't get into too much detail, but we are discussing that with Moment. Remember, it owns the actual the asset, as well as the equity, as well as the royalty sit within Sprott Resource Lending. They don't actually sit within the Sprott group of companies. They're not a royalty company, as you said. they have it on their books at the moment. They are looking to monetize that. So we are discussing that at the moment. So that's a potential, there's lots of, I don't want to get into too much detail, but we are working on lots of different opportunities to fill that gap on financing for sure. So, between some of these options, between the small stream, between the warrants, we can plug that gap very, very quickly without having to go back to the equity markets to dilute the company. As you said, there's a lot of value in those warrants. We could run a warranty exercise program, which allows you to offer, a reduced price, drop the price of those warrants to bring in that capital. You're allowed to do that in Canada, and you could bring in another 20 or 30 million easily in those warrants. So again, from finding that last piece of capital, lots of opportunities available and good support of shareholders. So from a investment point of view, this final bit of 50 million, you're running straight into cash flow generation.
Yeah. It's not a big concern, but for you to get it done. But what sort of time frame have you set for yourself to have that in place? What are you shooting for?
The financing you're talking about. Yeah. By September, October, we want to have that financing in place. We're actively working on it now. We're talking to 4 or 5 groups. We have a data room. We have some even initial offers. We're actively working on that at the moment. Given the summer, the plan would be into September, October to have something secured, announce something, have that close very quickly as we move into the back half of this year. Really, as I said, having financed in place, having finance and developer finance will re-rate us as we move forward. So getting that quickly as we move into the back half of this year is a real key goal for the company now.
And I think, we've spoken to Will, obviously, and that will appear a bit later here, I guess, probably. And he points out in detail the geological mistakes made by Pure Gold in the interpretation of the ore body. You mentioned that in the presentation as well. But what other mistakes have you kind of seen? There were some fuck ups with the plant. There was some gold that was trapped there. But are there any other big learning points for you guys?
Yeah, look, the main learning for me, Goran, was that the team who took on this project were never really project builders or operators. That team was called Oxygen Capital. They were mainly an early stage project developer, generating exploration focus. So, when you do that, they never really in my opinion, they were setting the mine up to be sold. They were never really viewing the mine in operation, building a mining company. They'd never built as a group an operation. They'd never put it back into production. So they were never really set up for that area. And so their approach, they leased all the equipment. I'll give you an example, Goran. They never really put proper infrastructure in place. They never focused on getting the right people to run the mine. They had like 6 different GMs in an 18-month period. They had different groups. The team at site weren't supported. They were not really in that place. Look, they did successful things. They built the mine. They got it permitted. But where they began to run into trouble was when they had to move from that early stage to that development stage and production stage. They didn't put the right people in place. They didn't have the right teams who understood the underground mining, the systems they needed in place. And that really hurt them. But I would say, Gordon, that in the last 6 months before they went under, they managed to bring in some key people that I know very well, very successful mining. And we can see, we have all the production records. They just began to turn things around. I can see that's one of the reasons why I like this asset. They put in place the structures. They hired SRK. They did a new resource model update. They put in new mining practices. They got their systems correctly. They put in a new GM who's a very good underground mine guy who now is working with Lundin Gold, actually, in Fuerte del Norte. Very, very experienced operators. And we could see that they were beginning to turn it around. Their grade was rising. The production was rising. The average production ounces was around 5,000-6,000 ounces a month. So they were just beginning to get there. So I believe with, another 6 months and maybe another $15 to $20 million, they would have got into production. But again, then unfortunately, COVID hit them. It was the last kind of nail in the coffin, which really put them under, really. So look, they were already beginning to transform. And, I saw that if we could take that continue their structures, do a little bit more of technical work, we would be successful. And that's really how we ended up acquiring the asset, which I saw.
So, I mean, for me, this ore body obviously has huge potential. You have the shaft in place, so you can get quite deep, and there you can see transformational potential. But for me, I just want to kind of focus on the first 3 years, because I think everything is going to be quite redefined by the time we get to the end of 3 years, irrespectively. So, the first 3 years is sort of the capital that you will require to hopefully transform the asset significantly to get into a high grade zone equivalent or something like this. So where will you start mining in sort of the first few years? And what do you think that will look like in terms of average grades? And what will the flow of ore look like within the mine as well?
Maybe what I do again is I just share the presentation a little bit, Gorm, so you can see kind of where I'm talking about, because it's a key difference. You're right. It's a key difference on the project. Just to go back to one of the slides there quickly. It's this slide here. Yeah, this is the slide. It's a very good understanding. This area under the west portal here is called the McVeigh zone here. And really, this is the mill is located in this area. And this is where really Pure Gold started mining. Because again, if you want to show the market that you're in production quickly, it's close to surface. You can drill this ore body from surface. You don't have to go down deep, build a ramp on the ground. So you can really show that you're in there. It's high grade, but unfortunately it's a complex system. So they started in this area and they didn't get the sort of grade that they expected in this area, mainly because they had a lack of understanding.
Actually, we can't see your cursor, so McVeigh is just below the west portal in the center.
Just below the west portal here. This is where the majority of mining took place during the Pure Gold era. Again, and I go back to my slides, they had lack of understanding of the ore body. They didn't have any underground drilling done, so they could only drill from surface. So remember, this ore body, we're drilling at like 6 to 8 meter centers, so very, very tight space drilling, whereas Pure Gold had 15 meter centers from surface. So very, very different approach. And so, our focus is mainly now in the bulk of the ore body. You have South Austin and Austin, right in the bulk of this ore body here, right in the center, mainly halfway down the shaft where all that big pink purple area is and that yellow area. We're starting that area. You can see the ramp actually as the ramp goes down at the bottom of that ramp. That's really where we're starting mining, which is the higher grade portions of the ore body. That's where we're potentially starting. It's much more, maybe Will got into this, it's less complex. It's much more continuous of an ore body. And that's where we potentially want to start over the next 3 years in particular of this ramp up that you talked about, Gorm. So higher grade and more continuous ore body.
And can you just give people some clarity? You can use with your hands. I mean, you have the east and the west portal, the connection drift to connect the two now as well, and you have the shaft. How will what will be the flow of the ore in the initial sort of first couple of years of production, most likely?
Yeah, one of the challenges was that the two portals are not really connected. So Pure Gold, and there's a road in between. So, they had a lot of challenges on moving ore from one portal to the other. They could only operate at certain times of the day. They couldn't really, efficiently move ore. So the connection drift there will allow us to move ore from the mill is located on the west side. So, they were coming from deep on the ground up to the east portal, the top, dropping material down, putting it in another truck and transporting across the roads to the west portal. So that became very inefficient, a lot of cost. So by putting this decline in place, it allows us to move ore from the east to the west very efficiently and with large truck size, big truck sizes, which reduce cost. So that's sort of there. As we get deeper into the ore body, the plan is as from level 12 down, we want to move, obviously then trucking versus shaft, it becomes very cheap to use shaft. We're going to renovate the shaft and use shaft from level 12 down. So the upper part of the ore body would be truck haulage through the declines and this connection drift. But as we get down to that level 12, we will bring ore downwards into that level 12 and up the shaft. So a combination of some trucking, some shaft to start, up to that 800 and then fully to the shaft as we ramp up to that 1,000 tons a day, sort of phase. Again, a phased approach.
And then just to give some context on where level 12 is, what level would you expect to start mining in approximately?
So we're starting actually on level 11. So we're starting some small mining on level 9 and 10, but the main sort of bulk is from 11 down, 11 to 15 sort of down. The shaft, just to give people an understanding, the shaft is 27 levels, down at the level. So halfway down the shaft, we're kind of starting to mine the majority of that ore. And the majority of the ore is from that level all the way down to the bottom of the shaft and below. So that'll give you sort of the scale of the mining, really. And that's area where it has new ore body, untouched areas, and that's where the majority of the mining will focus going forward.
And just to kind of set the stage, because we know what the mill is constrained to currently and what it could be upgraded to 1500, but what is the hauling of ore constrained to? Kind of what's the hard set perimeter for kind of east-west, just pulling it through the portal? And then what would be the constraint for the shaft as well, if you were to constrain that to a hard kind of throughput constraint?
Well, the shaft previously operated at nearly 2,000 tons a day. So it's a big shaft. It has a lot of potential. It needs some upgrades to go back to that. But that shaft today could move 800 tons a day very easily, ore plus waste. That could move very easily today. It'll need some upgrades to actually go to the full 2,000 tons, 1,000 tons of ore and 1,000 tons of waste. It will need that sort of thing. But to get to that 800 tons a day, once the shaft is up, that's quite easy to do. I'm talking about 800 tons a day, maybe 200 or 300 tons a day from the declines. That gets you that 1,000 tons a day very easily. And to go further ramp up, it's just about upgrading the shaft and getting to that. So we're not really constrained of ore movement, sort of. We have a lot of capacity in that shaft to move a lot more ore up and tons up the ore body.
Yeah, so for sure mill before haulage in terms of constraints, which is good, of course. So I guess the question for investors, just to get a sense of the production profile to kind of get you towards having a multiple 100,000 ounce production profile. And there's a few avenues to consider that. We'll get to that in a little bit. But first of all, the ramp up to get to 800 tons per day, what is your rough sense of how long that will take?
Yeah, so our plan really, Norm, is to start the mill early next year, middle of next year, ramp up. So, 2026 would be, give 2025 as a startup ramp up year. 2026 would be the first year at 800 tons a day, sort of, which would be around 60,000 ounces a year to start, 60 to 70,000 ounces a year to start. And then the plan would be the mill was running at 1,000 tons a day, actually, during the pure gold era. So then move into 2027 at 1,000 tons a day. So then you're ramping up to 80 to 90,000 ounces a year. And the mill can actually, with some capital, go to 1,500 tons a day. So I would see a 3-phase approach. Phase 1 to 800, phase 2 to 1,000, and phase 3 to 1,500 tons a day. So that will give the ramp up and growth of the project over the next 3 to 4 years sort of phase. None of them need, major capital. The mill will be built already. Tailings is already in place. Permits are there. It needs some adjustments to the permit to go from 800 tons a day to 1,000. And it needs a small bit of capital, maybe $10 million to go from 1,200 to 1,500 tons a day. So as we ramp that mine up, we have the ability to scale up. So once you start talking about that level, you're close to that 100,000 ounces a year. And also the potential down the road as you get into those higher grade portions of the ore body. 1,000 tons a day at 8 grams is way different to 1,000 tons a day at 14 or 15 grams. That makes a huge potential upside to the project. Obviously, we have to go down there, we have to define it, but we have a shaft that can be brought that material very quickly. So once it's defined, that 8-zone ore body at 20 gram material, we can bring that material up very quickly into the production profile. So that really gives you the idea of the scale long-term of the ore body. You could potentially, between the 8-zone, we also have our Rowan property, which we'll talk about, which is a 12 gram ore body. So, that's a hub and spoke system. So long-term, you have this 7 gram main which will form the basis of the ore body, but you have the ability to bring in 12 gram ore body from Rowan and a 20 gram ore body from the 8 zone. So you could have an average grade of around 10 grams on this. So at 1,500 tons a day, 10 grams, that's around 150,000 ounce production over the next 5 to 7 years as we ramp up the project.
And what would you expect the kind of the all-in sort of mining and processing cost per ton to be? Because you're dealing with multiple, like $500 in-situ value material, at least, and your recoveries are excellent. So that's kind of the value of a ton of.
I would say around 1,300 AISC, US AISC, around 1,300. As you know, all you have to do is look at the kind of costs have gone up recently, particularly in this area. Look, we have a high grade. Look, as we get into higher grade parts of the ore body, that will reduce down. But look at that 800 tons a day sort of number. Obviously, as you ramp up in production, you bring down that. But as a starting around 1,300 AISC, where gold is today, that's $1,000 margin, $1,000 an ounce margin,
So if we convert that calculation, because that's interesting. So if it's 1,300 per ounce at that sort of like 70, 80,000 production profile annually, 800 tons per day, 7 to 9 grams per ton of gold or something like this head grade, that would mean that the kind of per ton processing cost would be $250 or $200 plus mining.
That's roughly what around 250, 260 sort of US dollars, and split between mining is probably $100 an ounce, milling is probably another 50, 70, and then some G&A on top of that, so around 250 sort of mining cost. And, you can bench that very easily. Some of your investors can bench that. If you look at, typical mines in Red Lake, underground mines, you have Alamos Gold has a high-grade ore body, Wesdome Mining. We've done a benchmark around those current operating with a shaft underground mining. That's the sort of range, 220 to 250 sort of range. So that gives us a good benchmark. And remember, Goran, we're not a mine who's doing feasibility studies. We're underground mining as we speak. We have 150 people on site. We're drilling, blasting, loading, hauling. So we have actually actual costs. So when we do, another advantage is when we do this pre-feasibility, we're using actual costs. We're actually better defined than normal feasibility studies where you're doing estimates at plus or minus 15, 20%. We have actual costs. We're underground mining. We have people on the site. We have costs on the site. We have miners on store. So we know very well our costs going forward. So that gives another level of certainty on this study that, these are actual costs and they will be benchmarked against our peers. So we're very confident on those sort of numbers as we get in and start the production. But obviously, look, as you get into higher grade ore parts of the ore body, that AISC will come down, because it's based on a per ounce basis. As the ounces high grade comes up, your AISC comes down. So as I talked about that ramp up, I believe gold will rise over the next 5 years. So you have a rising gold price and a lowering of your costs. So that gives a lot of margin potential going forward.
Exactly. And we'll see in the PFS what you guys actually release. But just some napkin calculations here. It's like $200 to $300 mining plus processing. Probably is somewhat correct cost base. And then you can calculate various grades and what that equates to. So you can get a tremendous margin expansion.
So even at $1,000 an ounce, let's just call it margin, 70,000 ounces a year. That's a lot of cash flow generating within the next 2 years. It's not like that'll be 5 years down the road. Within, call it 26, 27 sort of period. So when you look at the risk reward or the sort of 70, let's say and one more capital raise of $50 million, whatever that is, you're getting at that sort of ounce profile with that sort of return over the next 2 years. That's a very good reward for a small bit of capital going forward. There's very few developers, Gorham, and you'll probably know within that has that ability to leverage very quickly, move to cash flow with those sort of margins in such a short period of time in a rising gold market. Like gold is already today above 2,400. If gold keeps moving, you could be in a $2,500 gold environment as we're moving into cash. And so you've even a bigger margin going forward.
can we just speak about the activities, the main activities, as you outlined in your last update, to get to restart operations, just kind of sequentially? If we just start with the connection drift, if you speak to the approximate cost and approximate timing to get that done, what's your sense on that item?
Yeah, so for us, the connection drift is a key part of infrastructure that we need to, I highlighted. That has a potential, that's about $12 million Canadian. That's, if I talk about Canadian, and we actually raised flow through funds to do that, actually, Goran. In Canada, you can actually raise flow through. So going back to that, managing without dilution, we raised flow through, actually, because it's a connection drift. We were able to raise flow through funds for that. That's part of it. We need to buy a camp. There was no camp ever on the project, so we're buying an accommodation camp. Is one of the things. They never had a crusher, actually. They used a contractor to do all their underground crushing, etc. So that's another piece of key equipment we need.
And if you mentioned the sort of the cost and when you expect to have it in place will be useful,
okay.
At least according to your time plan.
The connection drift, go back to connection drift, that should be in place by February of next year. So that started today. It's progressing over the next 8 months, and it should be in production or finished, completed by February of next year. So that will open up the ability to move ore, bigger trucks, operating costs cheaper. We've gone ahead and purchased the crusher. The crusher was about 2 million Canadian dollars. That'll actually be on site within the next month. That has been purchased already. That'll be on site. So that allows us to ramp up the underground mining, start the underground mining, bring the material onto the surface. We're also buying a couple of infrastructure facilities, like a mine dry, a maintenance workshop, which were never really put in place. They're around $5 to $7 million. Both of those are being fabricated at the moment, so they'll all be in place by the end of the year, effectively, as we move forward. They're sort of the main blocks of capital, as I said, around $10 to $15 million of real capital. We're also doing a tailings dam lift. So our tailings dam, we're doing one more lift now in the summer, which is the next level. And that will allow us to have up to 10 years of capacity in the tailings dam. So that's something that, because of the summer period, we're doing that. That'll be done by the end of the summer. So really those sort of are the main capital points. And we're starting underground mining in the next month or so to do some test mining. So that's another part of this de-risking. Again, the ore body, we'll take some ore up, we'll run it through some test mining procedures. We'll compare it to the ore body. We'll be able to come out to the market and say, yep, we've done a bulk sample. In the bulk sample, we got 2,000 ounces. In the resource model, it said 2,000. So it'll give confidence in that reconciliation. So they're sort of the activities as we move forward, our pre-feasibility we talked about. So with all those activities ongoing, the plan would be in the back half of the year for the board to make the formal decision to move into production, and obviously the financing in place. And then we would move into production early next year and ramp up over 2025 and sort of into full production, and starting 2025 would ramp up. And then year one full production would be 2026.
So the idea is really to make kind of a formal switch from, okay, now we're putting the final pieces on the chessboard together, and then moving into a attack mode and actually starting to fully focus on mining will be sometime late this year or early next year.
Yeah. We need some of those de-risking. I want to have some of those de-risking in place, a feasibility, obviously, so we can see the long-term potential of the project and upside. I think the market would look for that. Remember, the last mast operator never really put a proper feasibility study in place. They put a study in place. They went forward. The study was based on a wrong geological model or reinterpretation. So, we need to put that in place for the market for sure. And I want to make sure with all this infill drilling that we have a good inventory of mineable stopes ready to go. So I'm looking to have a year to a year and a half of mine design stopes following this drilling already in place. So we have a year runway before we have to find the next year. So, that needs to be done. We have this test mining program that I'm talking about, this bulk sample, taking these samples. So there are a number of de-risking that we need to do. And once those are in place and we feel confident, we also need the financing. So that's the fourth leg of this stool. So once we have those in place, we will actually make the decision. We're now moving into production and ramping up the project. Early next year, those should be in a position. Yeah.
And what sort of milestones have you kind of set along the way for next year? I mean, is there like, okay, halfway through next year, you want to reach 400 tons per day consistent throughput?
Yeah, the ramp up starts. Yeah, it is very much like that. The ramp up would be for most of next year, starting at 400, then going to 600, then going to 800. So we hope in the back half of next year to be at that 800 throughput rate. So, starting off at 400 tons a day, then ramping to 600 tons a day, middle of next year, and then the back half of next year be at 800 tons a day, so that we're ready to go in 2026 at that 800 tons a day.
So how quickly do you think you could reach 400 tons per day? Because it's still a decent production at that point. It kind of probably cut.
Yeah, I would say like second quarter of next year we would be at that 400 tons a day.
All right, so we're here with Will Robinson. Why don't you talk a little bit about yourself, briefly introduce you to our investors who you are and how you came to be with West Red Lake?
Yeah, for sure. So I'm Will Robinson. Pleasure to meet everybody. Vice President of Exploration for West Red Lake Gold. I joined the company in February of 2023, and shortly after joining, we began our diligence on the Madsen mine asset up in Red Lake, Ontario. Before joining West Red Lake, I worked for a company called Coeur Mining, which is a mid-tier gold and silver producer based in the U.S., 5 operating assets in South Dakota, Nevada, Mexico, and Alaska. So I basically did exploration at all levels while working with Coeur, all the way from at the mine site, and then worked my way up to a corporate level, doing a lot of M&A evaluations, working with the corporate development team, but then also providing a lot of technical support to the teams at the mine sites, generating regional concepts and new targeting ideas to help with that. So now with West Red Lake, I basically oversee all the geology. I'm also the acting QP for the company, so review of all technical disclosures before they go out to press. We'll kick it off a little bit with the geology now. Looking regional scale, so even outside of the Red Lake mining district. So here we have the greenstone belt that's shown here. It's an Archean greenstone terrain. And it's just to kind of indicate that, we're in the right package of rocks if we're looking regionally. A lot of these deposits are pretty well known and being, operated and moved forward by different companies. So the Madsen mine, we're located in this area here. We've got the Red Lake Mine Complex just next door, which is probably the best known, most successful operation over the years in Red Lake. I mean, the Red Lake district itself is a very rich, historic mining district. Over 30 million ounces of gold have been brought out of the ground in Red Lake. And, not just a lot of gold has been brought out of the ground in Red Lake, but a lot of high grade gold. And so that's definitely interesting for us as a company. We wanted to focus on high grade, underground type systems and deposits. And if we zoom in a little bit here, this is sort of a district scale geology interpretation for Red Lake, kind of simplified, but still gets the point across. So you can see the outline of the Madsen property here, sort of emboldened, and then these dark lines with squiggles on them are very important. So these are main regional structures. And so at Madsen, we find ourselves with the main deposit hosted along one of these very large scale, deep tapping regional structures. You can see up at the Red Lake mine, which is currently operated by Evolution. They're also along one of those big structures as well. And then as we work our way out to our Rowan property out west, we've actually got a structure that runs and more or less connects 3 past producing mines in Rowan, which is the main target area out at the property, but then also Mount Jamie and Red Summit. And so we are strategically located geologically in the right place because we're along these big structural corridors that, are essential for bringing in the fluids that form these deposits and enrich the systems in gold. So this is just a brief summary of our assets. Of course, the Madsen project, current mineral resources in the ground, about 1.7 million ounces indicated, a little over 7 grams. And then we've got another 0.4 million ounces of inferred at 6.3 grams. That includes the 3 satellite targets as well, Russet, Fork, and Wedge. And then if we shift over to Rowan, we just came out with a new mineral resource update in April of this year, 2024. We now sit at around 200,000 ounces in the indicated category, so much higher confidence ounces. And almost 13 grams per ton, so very high grade. The previous resource had, more ounces in the ground, but at a lower grade and at a much lower confidence. So those were all inferred ounces previously at Rowan. And so the way that we view this now is it's a much higher confidence resource. We had a much more rigorous estimation approach to it because we really wanted to make sure that we got that right when we did the new model and the new interpretation on Rowan. Red Lake has a history of fooling geologists and, making you think there's a certain amount of ounces in the ground at a certain grade. But then when you go to mine that deposit, sometimes you can be fooled. So there's been a number of situations where that's been the case. Some of the best known would be, the Phoenix deposit, which was Rubicon back in the day, like early 2000s, when they did an estimation on that deposit, had an inaccurate geologic interpretation and realized that it was a much lower mineral endowment at lower grades than what was expected. And then, of course, more recent times at Madsen with Pure Gold. When we were doing our initial phase of due diligence, I was part of that team that went up to Red Lake for that first tour. So that would have been I think it was in April of last year, 2023. And, one of the things that struck me as a geologist was there was an oversimplified geologic interpretation being used in their 2019 feasibility study, which was created by JDS, working with Pure Gold at the time. And so they had an entire life of mine plan that was built around an oversimplified geologic model. And the main area that they went into mine first was called the McVeigh zone. We can shift over here maybe and go into long section for that. But the key takeaway there is that basically they were going into a part of the system that was actually more geologically complex than other parts of the deposit at Madsen. And they were going in with an oversimplified geologic model. So when they went to go mine the deposit, they were getting excessive, internal dilution unexpectedly. So, for instance, McVeigh was categorized as a part of the resource that should have been grading around 7 grams per ton. But when Pure Gold actually went in to mine it, the grades that were going to the mill were more like 3.5 grams per ton. So once that occurred, the team basically took the life of mine plan, threw it out, and then started to essentially try to mine from the hip, so to speak, just trying to get high grade and ounces and tons anywhere they could get them. And unfortunately, in an underground complex, structurally controlled system like Madsen, that's just basically a recipe for failure, really. So it's very hard to recover once you deviate from your life of mine plan in a deposit like this. And so now, coming into it with a fresh set of eyes, basically, and more time afforded to us with the West Red Lake Gold team, it's been hugely beneficial because now we can take a step back, treat this asset more like an advanced stage exploration project, get underground with the drills, drill off the areas of the deposit that we see, that are holding the highest potential, and give ourselves an actual chance to get all this stuff defined and accurately understood before we go in and mine it. And so now we're transitioning sort of away from the exploration phase and into the mine restart phase. So it's been very exciting for the team.
So let's pull up the 3D model and kind of see where you're first of all, what you've done in terms of reinterpretation, and then sort of to what work you're doing to get very high confidence in being able to mine good grades in the first few years of production.
Yeah, so we'll be able to see a lot of that here in this example. So what we're seeing now is essentially, property scale. The Madsen property is outlined in this bold red line. And then I've just got the topography LiDAR image shown just to kind of give a sense spatially of where we sit. But if we turn that off, basically the main Madsen deposit sits here. This would be the wedge deposit. Then we have russet, and then we have fork. I've also turned on the domain for 8 zone to show where that sits spatially relative to the main Madsen deposit. If we flip this along section view, you kind of get a sense of that, where it sits deeper than the Madsen deposit and into the footwall of the Madsen deposit. And we'll talk a little bit more about the geology that's controlling where the 8 zone sits. But if we look at this high level, basically what we have is a large structure that runs essentially diagonally across the property, and the Madsen deposit sits essentially along that structure. And what that is an unconformity between two major packages of rocks. And so on this side of the unconformity, and an unconformity for the listeners or viewers is actually just a break in geologic time, but oftentimes it can be a big structural zone as well. And so the break in time between the rocks on this side of the unconformity was called the Balmer assemblage, and then the rocks on this side, which is the Confederation, is about 40 million years. So these are very old rocks. It's quite interesting actually when you think about it. The rocks are actually around 4 billion years old themselves. A very old Canadian shield. Lots of deformation has been undergone on these rocks, and these rocks have been subjected to a lot of strain and breaking. So, anyways, with that said, this would be our main area of interest along the main structure. So if we zoom in a little bit to the Madsen deposit, right? So this is a long section view of the deposit at Madsen. So light gray areas are remnant workings. I've shown drill intercepts grading, I believe, everything over a gram should be shown, but you can see with the legend over here, these are all very high grade hits, 10 grams and up. And this essentially delineates the different zones within Madsen. So this lobe over here is what we would call the South Austin zone. This area up in here is called the McVeigh zone. This central area here is the Austin zone. And then out in this area, we have the North Austin zone. And then we have other parts of the deposit as we work our way down Plunge. This would be Durlac out here to the far north, and this would be a continuation of the Austin zone to the northeast as well. And what you'll notice is that there's gaps sort of in between these different main pods or zones of mineralization. So those are where we have ultramafic units. So much more mafic composition rocks coming through and actually forming embayments to the mineralization. So there is some prospectivity along the edges of these areas, but essentially these aren't all necessarily like places we can go and infill. So we're focusing on the areas, adjacent to these ultramafic sills, but in and around, the existing resource currently. And so if we zoom in a little bit, just to give a recap of the work that we've completed since October of last year, we've had drills underground at Madsen turning. And so if I turn off the layer that we were just looking at, so if you can see here, these are the traces for the drilling that we've completed to date. As of the end of June, so Q2 or H1, I guess, of 2024, we completed almost 30,000 meters of drilling underground at Madsen. We had one drill turning since October of 2023. We added a second drill in April of this year. And we've currently defined about 55,000 ounces of what we call in-situ inventory, which would be represented by these dark blue blobs. And so speaking about sort of how we have a workflow now with accurately characterizing and defining the mineralization at Madsen. So this is all part of that process. So we start with the overall kind of block model for Madsen, which is the existing MRE or mineral resource estimate. And then we go into areas that show higher prospectivity because of grade, tonnage potential. Obviously, if we've got larger blobs of mineralization that are still adjacent to remnant workings, but a little bit further away, we're going to give those a higher ranking as well. And then we go in and we infill drill those. So with the definition program, we're drilling at a spacing average of 6 to 8 meters. So very tight drill hole spacing, but that's what is actually required to get the confidence in these different resource zones. And in a production scenario, this would essentially be stope drilling, right ahead of mine design and excavation. And so with that said, we've drilled about 30,000 meters at the end of June of 2024 to define roughly 55,000 ounces of in-situ inventory. So very high confidence. And so basically these blue blobs would represent our short-term planning model. And then these shapes are then handed off to the engineering team, and then they take them and actually design their MSOs or, modified stope optimizer shapes, which are essentially the areas that we're going to go in and mine. And so right now, the ops team is working in tandem with the exploration and geology teams, taking these shapes and these designs, and then we're actually planning to do a test mining phase imminently within the next month or so. That we're going to be going in, dropping stopes, actually understanding how the rock in the ground behaves up against some of these remnant areas. And so just to take a step back a little bit more about the strategy with the drilling. So it's currently a mix of approximately 70% infill and definition at that 6 to 8 meter spacing, and then an additional 30% of expansion drilling, which is at 10 to 15 meter spacing on average. And so the two key areas that we've been focusing on for growth with the expansion drilling are North Austin, which is out in this area, and then South Austin. And if I zoom into these areas a little bit, I'll turn on the grade so we can get a sense of what we're hitting. So again, with the legend there. So anything over 7 grams is shown in red. I'll go ahead and filter this out so we're only seeing the high grade stuff. So now we're just viewing all the hits over a gram. But what I wanted to indicate was that there's a lot of opportunity in areas of the deposit where we can define resources away from the remnant mining. And it's really important for us because these will give us the opportunity to define larger stopes, higher tonnage stopes that then we can potentially implement lower cost, more bulk tonnage mining methods, and then supplement those with some of the more discrete areas of the deposit that are up against the remnant workings. And so North Austin has been a target that was known about during the pure gold times. Actually, when they went in and started mining in late 2020 with pure gold, they had this target defined and they knew about it. And they actually had a drill sitting in the decline over in this part of the mine called the East Ramp. But as soon as the production switch was flipped on, all exploration stopped. And so there was no exploration drilling during the entire phase of pure gold from late 2020 to late 2022 essentially. And so that was an opportunity for us to come in and basically queue up a lot of these targets that were just sitting, waiting, ready, and start defining them and growing them and adding them into our inventory. And so just to give a sense on success as well for the exploration team, the drilling program has been very efficient in that we set ourselves a goal for 2024 to define approximately 55 to 60,000 ounces of this in-situ inventory. And as I stated, this is the model representative of mid-year 2024, and we're already at our target, basically, 55,000 ounces. So the team's on track. We're ahead of schedule as far as defining the ounces and the tons that we need for a restart scenario. And so by the time we do turn the lights back on at the mill at Madsen, it's going to be, we're projecting right now sometime in the second half of 2025. We're going to have ourselves a very healthy runway of high confidence, high grade ounces that we can pull from and extract and ensure ourselves a successful restart.
And
successful and sustainable.
And just to kind of, Chris, because as we view this case, and I think it's quite clear how Shane communicates as well. So, now you just need to kind of get back into commercial production, get up to the 800 tons per day approximately, stabilize, and then you're going to reinvest all of the cash flows to get the transformational, mainly driven by, significant grade increase. And we'll get to that. But it sounds like you're way outpacing what depletion will be. I mean, you'll deplete like 70 to 80,000 ounces in 26, probably when you're fully ramped up. Maybe between 25 and 26, maybe you'll deplete 100,000 ounces or something like this realistically. And you're way outpacing that with in-situ, very high confidence material. And just to give people a sense, what's the average grade of these 55,000 ounces you've delineated?
Yeah, absolutely. The average grade is actually quite nice. Here's just a slide to show that. So we're in the Austin zone, which would be the central portion of the deposit. We're at close to 7 grams per ton. North Austin, we're closer to 8 grams per ton with 10,000 ounces. In the South Austin, it's the area that's bared the most fruit so far. So we're at close to 10, just over 9 grams in that area, and 39,000 ounces. And so the thing again to point out about these models and these numbers right now that we're showing is that they're representative of very high confidence, de-risked resources. So this isn't like the basic MRE estimate, like indicated, inferred. These are essentially measured ounces that can be directly converted into essentially proven or probable reserves. So we don't expect to see much of a change, in the mineral endowment in these areas when they do get converted into an actual mine design. So that's something that's important to point out, I feel. And currently right now, as far as cost goes, we're running at approximately about, I would say, $100 an ounce all in. for defining these very high confidence inventory ounces. And so that's a really good conversion rate, if you look on like industry standards. So.
Yes, for sure. And I think that gives people some confidence for sure that you're able to sustain the sort of the transition period here, because that's what it's about. I mean, if we look at West Red Lake, the OG mine here, that's got into the high grade zone that they had, and it transformed the operation from something that would be considered sort of like a smaller mine in terms of production profile into a very a top tier one production profile, right? Several hundred thousand
exactly.
ounces.
And our goal, as you said, the production profile of this mine to start off within the first few years will probably be more in the 60 to 70, 80,000 ounce range. But our goal is to get over 100,000 ounces per annum, get it into that nice, healthy kind of like mid-tier sort of production profile as far as the mine goes. And the way to do that is either to up the production through the mill, upgrade the capacity at the mill, which is part of the plan. Those trade-off studies are going into our PFS study that we're working on now with SRK. We're expected to have that out by the end of this year in 2024. But the other part of that too, the way that you're going to get that step change in production is to increase the grade. And so we have a couple of opportunities and ways to do that are already queued up and ready to go. We just have to implement and get those into the pipeline. And one of those is 8 Zone, which of course, sits down here deeper in the mine, just off the existing shaft, which is around, 1,300 meters deep. And it's kind of an analog to the high grade zone, geologically at least, that made Goldcorp so successful at the Red Lake complex. They're at similar depths. They're hosted in similar geology and an ultramafic unit, an ultramafic still. And so 8 Zone, it's a little bit different mineralogically than the main Madsen deposit, but it's much higher grade. On the books right now, we've got a little over 100,000 ounces at 15 to 18 grams per ton. And so the way we're envisioning 8 Zone is it coming into the picture, in year 3, maybe year 4, when we have the shaft rehabilitated, we've got access down to those deeper levels of the mine. And then we can start extracting that higher grade material and then, blending it with the average, hopefully 7 to 8 gram per ton material coming from the main Madsen deposit. And then the other opportunity that we see for being a high grade sweetener, if you will, or mill feed source would be the Rowan deposit as well. That's another one that we'll talk a little bit more about, I think, in this presentation. But Rowan, again, gives us that opportunity to basically bump up our head grade, by at least double. So 13 grams as opposed to 7.5 to 8 grams. And then bring that material to the mill, supplement the material coming out from the main Madsen deposit, which will continue to be the meat and potatoes of the operation. But we've also got other things that we're looking at as well. Like, if we just sort of take a step back a little bit again here, this is this shape here represents the Fork deposit. And so Fork was always viewed as sort of a larger, lower grade resource area. I think its average grade is 5.5 grams, in the current mineral inventory, a little over 100,000 ounces. But what we noticed when we took a harder look at Fork was that there was a higher grade core within the shape, and it's fairly close to the existing mine. And so we reevaluated Fork this year and actually turned it into something that could be more economically attractive, similar to what we did with the Rowan MRE, a tighter, a little bit lower mineral endowment, but much higher grades. So now the way that we're viewing Fork is something more on the order of 35 to 40,000 ounces, but at a grade closer to 10 grams per ton. And so that's something that we still need to do additional drilling on to help flesh out that concept. But with our in-house estimates, it's coming together quite nicely. So there's opportunities like Fork. 8 Zone is a deep target, so we're taking our time with that one. We want to make sure that we can get down to it, utilize the shaft, some of the existing infrastructure along the way. But things like Fork and other targets that are a little bit closer to surface might give us opportunity to boost that head grade earlier on in the operational cycle. So,
and with opportunities like Fork, I mean, is that something that's kind of closed off, or ideally, if you want to go there and develop that, you would want to be able to follow that and mine it and see it expanding and being sustained over longer than 40,000 ounces? Is that still a possibility there with Fork?
Yeah, absolutely. So Fork is about 250 meters away from the underground workings at Madsen. And so at the rates that we typically see with developments, about 6 meters a day. So, I mean, feasibly, we could be at fork within a couple of months. These are all decisions that were boiling into this restart plan. None of these things are 100%, part of the plan yet. But these are all different ideas and concepts that we're formulating as an exploration team, as a geology team. It's our job to bring these opportunities, to light so that we can discuss with management and with operations to see if they make sense. But what we're seeing is there's a lot of opportunity close to the existing deposit at Madsen, not just down plunge. Like obviously, if we load up our high grade drill database here again, and just see like all of these zones, within the main deposit are still open down plunge. You can see where we've got some really nice high grade hits down here. I mean, 18.5 grams over a meter. Here's another half ounce, 15 grams. There's a lot of prospectivity and geologic evidence that supports that this system continues at depth. I mean, if the best example in my mind is the Red Lake complex right next door. So we're down around, 1,400 meters in the main deposit. 26 levels historically is the way that I think about it. And there's about 50 meters spacing between historic levels. So it's about 1,300 meters. And then, but next door at the Red Lake complex, they're down 3.5 kilometers. And so we're really only, down about a third of the distance at Madsen. And we find ourselves along a major regional structural break, as I mentioned before, with the unconformity between the Balmer and the Confederation assemblage. And so we have very high confidence that this system will continue down below where it was, historically mined. Obviously, we have to get down to those depths to drill these areas out and test and prove that continuity exists. Because if we were, say, drilling to target the down plunge extent in this area from surface, it would essentially be, like 2,000 meter holes. So that'd be very, very expensive exploration. And we'd rather allocate our resources and our capital, I guess, for the exploration work on shallower targets, more near-term targets, and advance those quickly. So we're trying to approach this systematically as opposed to just throwing Hail Mary shots at the really deep stuff early on.
Yeah, and I guess, the game is currently now, the bulk of your focus now is to get this thing back up and running successfully. And then as that's starting to prove out, your mentality will more and more shift to getting aggressive about actually finding the transformation opportunities. That's sort of the dynamic. And as we know, with the high grade zone in Red Lake, that was just for context. They switched from sort of like I guess like 15 grams over to, I can't recall the exact numbers now, but it was like not just a 2 or 3x grade increase. It was even more than that.
So, it was an amazing step change. And I remember for their production profile, they went from like a 200,000 ounce producer to like a 700,000 or 800,000 ounce producer per year, just because of one zone of high grade gold. And we have that potential, on the Madsen property. We've got the same kind of rocks. We've already got geologic evidence within the 8 zone that these types of chutes can exist near mine. And we're actually testing targets within the ultramafic unit that hosts Madsen this year with some of our surface drilling. And so that's sort of our main area of interest, if you will, for the regional exploration and putting together new concepts that weren't already tested, or the can kick down the road during the Pure Gold days when they were defining. They did a lot of really good exploration work to find a lot of great targets, but we don't want to just kind of jump back in the saddle and start drilling off areas that have already been drilled necessarily. We want to try to put new concepts in place and test some new theories. And we can kind of switch gears a little bit and touch on that. And just in case people watching are curious, this area here, this is another set of historic workings, part of the Staratt-Olsen mine, which was also a significant past producer, 160,000 ounces, I think at around 8 or 9 grams historically. So high grade, it's close to our wedge resource area. And so this is another one of these, past producing mines on the main structural break, showing prospectivity. And there's quite a bit of blue sky just in between Madsen and Staratt-Olsen in this area with very little drilling, adequately testing this area. So that's another area that we're paying attention to for sure. But I'll turn on some geology really quick and we can talk a little bit about the regional prospects. So what I mentioned earlier, the 8 zone is hosted within this unit called the Russet Lake Ultramafic Complex. And this entire unit has definite spatial relation with mineralization at Madsen across the property. If we kind of rotate a little bit here, and just to show how the different resource areas sit proximal or spatially relative to the Russet Lake ultramafic. So the main Madsen deposit kind of branches off away from it. But if we work our way further down to the south, which would be in this direction, we have Fork, which sits just on the hanging wall of that ultramafic unit. And if we continue further down, we've got Wedge, which is also sitting just on the hanging wall of the ultramafic unit. And there's actually a portion of Wedge sitting in here, this area, and it's called MJ. And that's actually hosted within ultramafic. It's more visible gold, high grade within quartz stains. So it's very similar to an 8-zone style target as well, just not quite as high grade and constrained as 8-zone proper, but it is showing again that these styles of mineralization exist outside of 8-zone on our property. And so that's the main focus of our exploration right now is obviously trying to discover another 8-zone, but hopefully at shallower depths. I mean, ideally that would make the extraction scenario a little bit more economic. But if I turn this back on again, so what we would like to do and what we're currently defining is prospectivity along this entire trend of the Russet Lake ultramafic. And so we already know we have Fork, we've got Wedge, we've got some hits with grade in between. You can see some high grade hits from the historic drilling. I can turn on traces if it's helpful to see those. Okay. And so we have, 10 grams per ton is the magenta, 7 grams and up is red. So we do have hits in these areas as well, showing that there is mineralization, just not a lot of drilling to infill those areas, right? And then as we work our way further to the north, we've got some exciting targets as well, just up plunge from 8-zone that are running fairly close to the Madsen deposit proper. So that's kind of our main area of interest right now. The other thing that I think is kind of interesting if we're looking regionally and just conceptually at the geology and how the different mineral zones are occurring. We turn this off. So just taking a look down, this is plan view looking at Madsen. Anyways, the Madsen structural corridor basically runs like this, right? And if you see, look at the orientation of some of these other zones off of Madsen, like Fork is sort of coming off at a little splay in this direction. We come up here, this would be the McVeigh zone. And so that splays off a little bit oblique to the main structural zone. And then this is North Austin. And so what we're seeing is there's a periodicity, about a 1 kilometer spacing between these different splays that are coming off the main structural trend that hosts the Madsen deposit, but each kind of hold their own enough mineral endowment to be these little satellite resources or splays. Obviously, North Austin has been one of our main targets of the underground drilling program for obvious reasons. And then McVeigh is one of the main zones of the deposit. And then Fork, we hope, will become another future mill feed source for the deposit. And so what we're doing is we're basically marching along to the northeast along that same trend, looking for additional splays like this. And one of the layers of data that we have that could give us evidence of where these might sit is the geophysics. So we've got a really nice AirMag geophysical layer data set that was flown in 2014. And it hasn't really been used much in the past for exploration targeting across the property. And so we wanted to start looking at this with our team that we have. We've got some in-house expertise evaluating geophysics. And what we see is that there's actually nice correlation between some of the magnetic high signatures. This is the Fork domain again. Look how it lines up just perfectly with that. So that's very encouraging. What a lot of these magnetic highs are showing, though, is stratigraphy. And so a lot of the long linear magnetic high features that we see, those are the ultramafic units or mafic units across the deposit. So it's very good at mapping geology and structure. But what we're actually realizing is if we look at this in relation to the known mineral deposits, there's actually some relationships there that could become drill targets in the future. So if we look again at that spacing between Fork, McVeigh, North Austin as splays, and then we keep working our way north, basically looking for the next splay, if you will. We've got a few options that could be defining those. And so there's one here, a break here, that's about 1 kilometer away. And then there's another break here that's about 1 kilometer next up. So this would be about 2 kilometers northeast of the main Madsen deposit on trend. The main unconformity is following this dark blue trough. And it's eerily similar to Fork as far as size, scale, magnitude, all of those things. And it's at the right angle near a bend in the overall regional structure. And in these types of orogenic systems, bends and inflection points in the big structures are great places to be, because those can be dilation zones and add extra structural deformation. And that's all plumbing, for mineralizing fluids. And so these are some of the concepts that we're starting to put together regionally, and hopefully we're going to drill test a few of these this summer before the season's over.
Could we just, before we go to Rowan, could we just zoom in on the 8 zone proper now? And because obviously, once the shaft is rehabilitated, actually 8 zone could, if it's big enough, it could potentially feed the entire mill. It's not impossible once the shaft is completely rehabilitated, according to Shane. So
yeah,
absolutely. What's the potential for expansion for the 8 zone? What do you know currently, and what remains to be known?
Yeah, for sure. What we know about 8 zone currently, I'll turn on the block model so we can see the extent of that relative to the domains. See, there's a lot of high grade in the 8 zone, right? And it did have a little bit of historic mining done on it. You can see some of the old, the remnant stopes, and it's been drilled essentially to its upper extent, up plunge. So we're not seeing a lot of potential up plunge, but down plunge, it's wide open. And the only challenge with extending that down plunge is the depth. And so what we're looking at doing this year, later in the year, probably sometime in October, is getting a drill down to the 12 level of the historic mine, which would be, if I turn my slicer back off, which would be kind of this area here. So we could set up a drill off the 12 level, drill down plunge on 8 zone, but you can see that there's nice high grade hits indicating that this thing continues down plunge. So this is 2 meters at half an ounce. This is about a meter at 12 grams. So, really nice high grade hits, but there's just not a lot of drilling down in these areas to tie it all together, right? And the main reason for that is just because they're very deep holes. But we see a lot of prospectivity to continue growing 8 zone at depth. But this is a target that probably makes more sense to put, a healthy amount of drilling dollars into when we get down at depths in the mine with the dewatering and everything to drill it off effectively.
Right. So it will kind of remain a semi open question on how large it can be until it becomes more effective. But that's certainly one of the leading candidates for transformational potential for you guys.
Yeah, absolutely. You can see the block model here, the way it sits, and the way that it's defined. You essentially got, can't remember how far it is. Yeah, about 300 meters of strike extent. That's kind of defining that down plunge that's modeled and into the actual, MRE, because the drill spacing is adequate enough to estimate it. But then if you just extrapolate that down to where we have these hits further down, you could extend that, at least double it, right? And so there's potential to double the size of this resource, I would say, if we're just looking at it spatially. But in order to do that effectively, the prudent way to do it would definitely be to wait until we can get down with closer drilling to target it effectively, because the way that you think about these types of deposits is they're not necessarily big planar features that you can just throw drill holes at, and as long as you hit the plane, you're good. They're actually more like lines. So they're 2-dimensional features, essentially rod shaped oftentimes. And so they're very discrete targets that are challenging to hit. And so if you're drilling long holes that have inherent deviation related to the downhole trajectory of that hole, and you can't really control that. There's different technologies for downhole orientation tools and things like that, where you can actually do directional drilling, but it's costly and it's not ever a sure thing. And so we will be testing the down plunge potential with a few holes this year, just to show that it's real, with some modern drilling. But the way to really blow the doors off this thing is going to be getting deeper and getting very close to this part of the deposit, so that we can drill it effectively with shorter holes and really expand it.
And you guys have a few hits that are several hundred gram as well, like it's like seriously high grade, right? And would it be fair to say that many of these holes that you hit, when you hit at least below the defined structure, they're kind of, you're just putting down the holes and you can't really target quite accurately, as you just said. So once you get down there, what's the nature kind of the veins or of the structure? I mean, is there some dissemination around the veins, and the veins can be even higher grade than what you're kind of randomly hitting now, or the data that exists? I mean, could the veins be a lot higher than 15 grams potentially once you can target it more accurately, or what's your thinking around that?
No, it's a great point. Yeah, with new technologies and assay and assay methodology and stuff. So this would have been an old underground hole. Madsen underground MUG is what this terminology. So when we drill the 8 zone, we're going to be doing top to bottom assaying. So we're not going to have gaps in our analytical data set down the hole. We're going to do trace element, multi-element. We're going to do oriented core. So we're going to get a much better handle on the structural controls and the orientation of this deposit. And, all of those layers of information are going to go into our interpretation. And then the other piece too, with, you mentioned the assays and the grades, just doing metallic screen analysis, that really allows you to accurately characterize the coarse gold component is huge. You see companies even in this modern day and era go out and they run drilling programs and deposits that have a coarse gold component, and they won't do metallic screen analysis. And they're really not discrediting, but kind of giving themselves a lesser benefit of the doubt, if you will, with the grade, because you'll often underrepresent the grade that exists within the deposit if you're not doing metallic screen. Because what metallic screen does is it captures all of that coarse gold, whereas with standard prep and analysis techniques, you can actually lose gold during the screening process, because the gold will get crushed, it'll get flattened out into larger surface area pieces, and then they won't ever make it through down to the fine grained pulp material that ultimately gets analyzed. And so you'll lose that just in the prep process if you don't do metallic screen. So all of those things together, as you said, we expect to get a nice boost when we do actually start drilling. We saw the same thing at Rowan too last year with the drilling that we did out there. Is all of the visible gold samples that we were seeing, we were running metallic screen, and when we would compare to historic holes nearby, they were oftentimes much higher grade because we were capturing all of that gold and representing it accurately. So that's a good point. And
you would think that sort of with development in mind, you would think that the exploration activity at 8 zone would ramp up maybe significantly 12 to 18 months from now or something like this.
Absolutely. Likely. Yeah, absolutely. The main thing that we're dealing with right now, as far as the timeline for getting to 8 zone, is the dewatering schedule. And so we're down to about 13 level in the mine, which would be this horizon here. See my cursor? And then we expect to be fully dewatered within, call it the next 8 to 12 months. And then once we get down to these lower levels and we get the shaft rehabilitated to a point where we can bring equipment and things down, we can actually take a drill, a small drill, whatever size it needs to be, down the shaft, set it up, do some slashing and rehabilitation on some of these historic levels. And we can put a drill down there before we ever even get, mining development or a decline or something like that down to those levels. And so we're planning to take full advantage of that opportunity when it presents itself, for sure.
So let's wrap on Rowan then. Let's go over there and take a look in how you think that that's going to slot in. And it sounds like, 8 zone would be sort of a 3-year, 4 thing, and I think Rowan should be about the same due to permitting and so on as well.
Yes, correct. Yeah, so Rowan, we're envisioning this thing to come online on or about the same time as 8 zone, which if we get both of these things plugged into the production profile at the same time, it'd be a huge boost. As I mentioned before, the existing resource at Rowan is around 200,000 ounces of indicated, close to 13 grams per ton, so very high grade, almost as high grade as the 8 zone, really. And that's twice the size of the 8 zone as it currently stands. We also have an additional little over 100,000 ounces in the inferred at close to 9 grams. So not quite as high grade in the inferred, but we're confident that we can boost the overall ounce profile of the deposit with some additional drilling. So Rowan has a lot of upside to it for sure. We can talk a little bit more about the program that we completed last year. So the main focus last year in 2023 was to come in, take the existing MRE, which the last rendition before we did our update was December of 2022, and really get some infill drilling done in some of the highest priority areas. And so from the 2022 model, basically we had a couple of nice ore chutes defined, but this drill spacing holding all of that together was fairly wide space. So we wanted to get in and tighten that up, increase our confidence, just with the nature of the beast of these types of deposits and the history of the Red Lake District, really, with these deposits fooling, geologists and technical teams that don't have, the density of data that they require to accurately model the deposit. We didn't want to fall into that trap. And so we wanted to come out of the gate, drill this thing out to a point that we were confident in it, remodel it, reinterpret the geology, and that's exactly what we did. But just to touch on the resource as it stands. So envisioning this thing high level, what we're sort of thinking is to possibly bring 200 tons per day from Rowan to the Madsen site. So 200 tons per day, call it at approximately 10 grams per ton with dilution for mining and everything like that. So if you think about it, only having 200,000 ounces now in the indicated category at 13 grams, that's still a supplemental mill feed source for 8 years or more, just at the size that it currently sits. So it's already big enough and high enough grade to be what it's supposed to be. But on the back of that now, we have a lot of opportunity to grow that resource. And so we'll talk a little bit more about those targets later. But I really wanted to drive that home to the audience that even though the overall mineral endowment of Rowan decreased as a result of the new estimate, we've now got a tighter, more constrained deposit that's higher grade, higher confidence, and it's already big enough and high enough grade to provide that supplemental mill feed to Madsen. So basically to summarize from last year, 62 holes, a little over 20,000 meters drilled. We did all of the analytical suite, multi-element, oriented core, top to bottom assaying, met screen on all gold samples or visible gold samples. So we got really good, accurate characterization of the grade distribution within the deposit. Most of those meters went into this area called the East Zone. It's the most pronounced ore chute as part of the system at Rowan. And it hasn't been historically mined. So the other chute that we had defined, we called the West Zone. You can see with the green here, these are historic workings. They mined down 3 levels on the West Zone. There's a great exposure of this on surface too that's all been scraped off. So you can go up there and actually see the geology and the interaction of the veins and the different lithologic units. So it's a great area to take people out into the field. But in the East Zone, this is a totally intact, untouched ore chute that's essentially 250 meters along strike, and we defined it down to about 500 meters depth with the drilling that we did last year. So it's very large. Typically, continuity along strike of an average ore chute, I would say, is more often on the order of like 50, maybe 100 meters. So we've got something that actually holds together over a distance of 250 meters and is wide open down plunge. And there's obviously opportunity for additional chutes along strike. Some of the highlights from the drilling. 70.8 grams over 8 meters was our definitely highest grade intercept that we had during the program. That was very exciting. 50 grams over 4 meters, 66 grams over 2 meters. I mean, very high grade, but also, what we consider to be mineable widths. Obviously, we're still in the early stages. We don't have a PEA yet on Rowan. It's not going to be part of the PFS for Madsen at this point. But we expect that, with the widths that we're seeing at Rowan, it's going to lend itself pretty effectively to a mining scenario if we can keep it at that 2 meter thickness. And we came into the modeling approach as well with that in mind. And so when we did the modeling and the estimation on Rowan, we composited all of the intercepts to a 2 meter width so that we weren't, artificially increasing grades and skinnying up the resource to a thickness or a thinness, I should say, that may not be mineable. So we wanted to keep everything at around 2 meters or wider and see if it held together. And it actually held together quite well. And so that was really encouraging because I think historically Rowan was always viewed as this very skinny, discrete, but high grade deposit, but mineability was always a question. And so we really wanted to answer that question with this phase of work. And we did. And thankfully it held up quite well. 43 out of the 62 holes that we drilled hit intercepts greater than 10 grams per ton over half a meter, which is a pretty good success rate when you're thinking about a nuggety gold deposit. We were targeting around 40 to 50 meter spacing with all of the drilling, and that held together quite well throughout the program. We also ran PEA level metallurgical test work. This was actually oversaw and guided by the same QP who did the Madsen metallurgy work and designed the flow sheet for the Madsen mill. Her name's Kelly McLeod. And what we saw, and this was expected because of all the coarse gold that exists at Rowan, but extraction above 98% using the same process flow sheet as the Madsen mill. And the real sweetener with that is 70 to 80% of that recovery was in the gravity circuit alone. And so we can be collecting 70 to 80% of the gold from Rowan in the Nelson concentrator, which is the gravity circuit, which is on the very front end of the milling circuit. So these are easy ounces right off the top, going to the Madsen mill. So that's all just great, for the economics and the process flow sheet for it. This is just to compare between the two models. I think this is helpful for people, and this is all in the tech report too. We put that tech report out in April of 2024, so there's more detail in there, but we have this exact same figure in the tech report. We wanted to be very transparent about what changed between the original model and with our new model. So you can see the reduction from a little over 800,000 ounces at 9.2 grams down to around 300,000 ounces. But the big takeaway here, again, is 200,000 ounces at almost 13 grams, which is 40% increase in grade in a much higher confidence category. And so those are essentially ready to be, converted into probable reserves whenever we get to the point that we want to include them into a technical study that includes Madsen. So I just want to definitely, drive that home to people viewing this and wondering what changed. You can see the 2022 model was much broader. It was stretched out with less drilling, really defining a lot of those domains. And so what our drilling did is it allowed us to really tighten up the deposit footprint. So we have a smaller, tighter footprint, higher grade deposit, all still underground. So it's going to be overall a very small footprint operation, which of course is good for, social license and ESG considerations and environmental implications. So that's kind of what we're looking at now if we compare the two deposits. And as I mentioned before, even though the overall ounce profile reduced as a result of our more stringent estimation parameters, there's still a lot of upside to grow this thing. And so I've just highlighted areas that are essentially the down plunge extensions of high grade areas in the existing MRE, but things that didn't quite make it into the resource estimate just because we didn't have enough drilling around, certain hits. And so the plan, of course, would then to go back in and then kind of infill some of these areas, 2 meters at 10 grams, 2 meters a little over 10 grams, and get the data density that we need to then bring these back into the MRE. And, and there's even other targets along strike at Rowan that are really interesting. This is a little bit further out to the northeast. If I flip back, you can see this kind of lobe out here. It's about 500 meters away from the existing deposit, but we've got 4 meters at 26 grams and then another 2 meters at 38 grams. These are composited intercepts, 500 meters along strike to the north or to the east from Rowan. So these are essentially untested, and so follow up on those is warranted as well. So still a lot of upside at the Rowan deposit.
Yeah, and these systems tend to go deep. I assume there will be no reason to believe geologically that they would not extend, for kilometers potentially, as most deposits do here in this setting.
No, you're absolutely right. It's wide open. We've only defined it down to around 500 meters depth. And some of our best intercepts are actually down in these lower areas of the deposit. And so we're seeing, not necessarily grade and thickness increasing at depth, but we're seeing at least the grade and thickness continuing at depth, which is very encouraging. And again, those are just very deep holes, right? So to come in and set up a program where you're drilling, 700 meter intercept depths and things like that, those are going to be 1,500 meter holes. So we can definitely do that. And it's worthwhile to do at least a few of those to show proof of concept. But we'd rather get a lot more bang for our buck and grow that deposit with slightly shallower targets that really have a lot of upside because we see high grade hits all around some of these gaps, right? We just need more infill drilling to bring them into the resource category.
So if we just speak to if we move over to kind of the beyond the restart here, the shaft is obviously kind of a fairly big part of that to get down to potentially the 8 zone or deeper, because there's more maiden material, untouched, unmined, higher grade on average material, and more exploration upside most likely to depth from our understanding with Will, at least probably. So with that,
there's a lot of potential.
What would it cost to kind of de-water and drive down and rehabilitate rehabilitate the shaft? I mean, do you have a sense of what, for example, to get down to the 8 zone and be able to mine there? What's the cap?
Yeah, so the shaft is already halfway dewatered. So we're dewatering the shaft at the moment. We're down at level 14 now in the shaft. And we're continuing to dewater. So by the end of next year, when we do start mining, we'll have completely dewatered that shaft. We'll be down to the bottom of the shaft dewatered. So that's the dewater issue. The shaft does need, we could actually probably then very quickly bring some ore, a small amount of ore, from that area, that 8 zone area, into the mill. That 300-400 tons a day sort of material. But if that's a 20 gram material, it makes a big difference to the production profile very quickly. Even if you're bringing 600 or 700 tons at 7 grams and you're blending that in with 200 or 300 tons at 20 grams, you get an 8 or 9 gram ore body, blended mix. But to really then get into that area, we would need to spend probably $20 million on the shaft, $20 to $30 million on the shaft to really upgrade it to get that high grade. So again, that would be in year 3 or year 4. That's not early stage capital, and that would be paid out of cash flow really from then.
Yes, and that would be on the back of defining hopefully an ore body that can support the entire throughput.
Yeah, that would be defining another 1 million ounces of an ore body down below that level, plus 8 zone growing, plus getting down there. So I think that would justify, a new shaft today. The value of the shaft really, is a new shaft today in Red Lake in that region is around $200 million. It's a large capital that we have already in place. Okay, it needs some upgrades, but to haul ore at that level and scale, it's a real advantage to the project, really.
And if we speak to the throughput capacity increase, of course, the mill could probably run above the official throughput, as we saw with pure gold, 1,000 tons per day or something like this. But if you want to go up to 1,500, and then you could potentially push it a bit higher as well, the cost was very small. You can clarify the cost again, but what's the timing of this that you foresee? Would that be a early 26 activity, or what's your vision of that?
Yeah, so look, $10 to $15 million is what it would cost. Put that up to 1,500 tons a day. My view would be it's more a 27 sort of thing. I think we need to get run rates consistent at the different stages. So, call 2026 at 800 tons a day, then moving forward, we would be able in 2027 to go to 1,500 tons a day, and scale that up because, it's not a big cost. And during 26, we could upgrade that mill as we're going to be able to get that run rate. The mining, it really depends on how much success we'll have on the high grade material and also the ability to ramp the mining up. The shaft is key to that, using the shaft as well. So yeah, there's some of the things that could be done during 26 so that as we move into year 27, which would be full run rate year 2, year 3, we would be ready to go to that 1,500 tons a day very easily. And we have tailings capacity already in place and we have permits for that.
So would you say that the expansion throughput is kind of contingent on shaft rehabilitation? Or is that not completely fair?
Yeah, I would say that. Yeah, to get sort of 1,500 tons a day from that depth of a mine is very, very difficult. You'd have to have a lot of trucks. You'd have to have a lot of movement of material. So it is contingent on rehabilitating that shaft, down to probably level 14, level 15. You wouldn't have to go the full level down, but you'd need to get down to the real area. So that probably $20 million would probably need to be spent on that shaft.
And what are the actual items that are upgraded in the flow sheet to make that expansion? What are the installations? So
so in the mill there was a brand new SAG mill put in place, but we need to upgrade the ball mill. The ball mill was a refurbished ball mill, so that just needs to be scaled in size. A new one put in there. There needs to be some new tanks for leaching needs to be put in there, and a few other compressors to increase the air capacity and the milling capacity, some upgrades to electrical to increase the power. But again, small, no expansion to the mill, no size expansion. The room is available. It's not like we have to build a complete new line or something.
And then we need to speak about Rowan as well, because it's an interesting opportunity. First of all, can you give the kind of the permitting timeline of things where you could actually start mining there at all even? so we just get that off the way first.
Yeah. Rowan it would take probably 3 years, Rowan, to get Rowan into place. We've already started drilling. We've drilled on the ore body. We will be drilling again next year. We've already started to apply for the permit. And in Ontario, you can do what's called an exploration type permit, where it's like a small mine permit. So that's what we're looking at. That's probably a 2 to 3 year process. So, this could potentially come on, as I talked about, as the shaft is ramping up, as we're getting to that 1,500 tons a day, we could bring that material. And it's really going to operate as a satellite ore body to the project. Yep. And it's higher grade. It's 12 grams. Remember back to my concept of bringing higher grade material in. So again, you wouldn't have to bring in, you could bring in 400 or 500 tons a day of that material into the mill, blend it with, the Madsen, blend it with the 8 zone. You're really getting a lot of high grade material then in the mill. So that's where you're getting the real upside in gold and in the gold production.
Yeah, and of course you have the trucking. I think Will mentioned was 80 kilometers, so that should be you slice up a gram per ton or something like this.
Yeah, and you need to blend really. It's not about tons really. It's about high grade margin really. So bringing high grade ounces into our mill will really be the opportunity going forward.
And just to give some context at Rowan, is there a portal there? Is there some infrastructure in place to access, or do you have to actually build everything?
No, all that has to be built. Rowan is just an exploration project. And we've already put together a project description, which is the first stage of permitting in Ontario, and that's been submitted. So, the clock is ticking. We're doing our baseline studies. We're doing our sort of geological understanding. So, it is started. It is the plan to put that into production to use it as part of Madsen.
But I mean, it seems to me that the probability that Madsen that you will be able to find that kind of grade fairly close to existing infrastructure at Madsen is pretty decent as well. So it might end up being the case where you don't need to bring in 12 gram from Rowan. You have sufficient of it.
Yeah. Look, if we define that 8 zone as we talked about, and that's 20 gram material, you're not going to bring in 12 gram material to displace 20 gram material, which is right there at the shaft. So that gives you the opportunity to do something, to blend it. But it would be there as an opportunity. Potentially, as you say, you got to get down deep into the system. We've got to drill it out. We've got to develop down. So it's a timing issue, really. If Rowan could come on quicker, it could fill the mill while you're waiting for that. So it really gives you the opportunity on timing of how quickly you need to, whichever comes first goes into the mill first, effectively.
Yeah, and then the final question, Shane, is what if you just would outline the 5-year vision of the company, because we know that Frank has a big vision here and you do as well. That's why you started the company to join. So just give us that.
Yeah. The 5-year vision really is to become a mid-tier producer, gold mine producer in Canada. This will get us, Madsen would get us to 80 to 100,000 ounces, maybe ramping to 150,000 ounces. But the idea would be to buy other assets and grow this company to a 500,000 a year ounce producer over the next 5 years. We have the team, the backer, and the board who have done this before. We have a good management team. So I think we've all the hallmarks setting this up to go there. And look, there's a lot of assets out there that potentially would be an opportunity to buy, to be bolt-on assets to grow. That's being done with Endeavour Mining, it's been done with Aris, and that's the vision for West Red Lake.